Ladies and gentlemen, good evening and welcome to Anlon Healthcare Limited Q3 and 9M FY26 conference call hosted by Confidely Partners. As a reminder, all the participants' line will be in listen-only mode and there will be an opportunity for you to ask the questions after the presentation concludes. Please note that this conference is being recorded. Before we begin, I would like to point out that this conference may contain forward-looking statements about the company, which are based upon the beliefs, opinion, and expectation of the company as of the date of the call. This statement do not guarantee the future performance of the company, and it may involve risks and uncertainties that are difficult to predict. I would now like to hand over the floor to Mr. Parth from Confidely Partners. Thank you, and over to you, Parth.
Thanks, Thanks, Abhinav. Good evening. Ladies and gentlemen, good evening. Parth here from Confidely Partners. We represent the investor relations for Anlon Healthcare Limited. On behalf of Confidely Partners, I warmly welcome you all to Q3 and 9M FY26 earnings call of Anlon Healthcare Limited. The company is represented by Mr. Puneet Kumar Rasadia, who is the Chairman and Managing Director at Anlon Healthcare Limited. I would now like to hand over the call to Mr. Puneet Ji for his opening remarks. Thank you, and over to you, Puneet Ji.
Thank you, Parth. Good evening, everyone, and warm welcome to Anlon Healthcare Limited's Q3 and 9-month FY26 earning conference call. Thank you all for joining us today. Let me begin with our financial performance for Q3 FY26. The company reported total income of 35.78 crore compared to 9.38 crores in Q3 FY25, reflecting strong year-on-year growth driven by higher API and intermediate volumes. EBITDA stood at 12.54 crore with margins at 35.06%, with PAT came in at 5.15 crore compared to a loss in the corresponding period last year, supported by operating leverage and improved product mix. For the 9 months ended FY26, total income increased to 121.32 crore from 71.49 crore in 9-month FY25. EBITDA rose to 32.56 crore with margins improving to 26.84%, and PAT grew significantly to 18.02 crore, demonstrating strong scale-up in operations and continued demand across our core API and intermediate portfolio. From a strategic standpoint, this period marks an important phase in Anlon's growth journey. We continue to strengthen our position as a research-driven manufacturer of high-purity pharmaceutical intermediate and APIs with the presence across 15 countries, supported by 21 DMF filing and growing regulated market focus. Operationally, our manufacturing platform remains robust with our Rajkot facility operating at healthy utilization levels and supported by strong R&D capabilities and expanding molecule pipeline and increasing CDMO engagement. We are currently developing 3 molecules for 2 global innovator companies, which reinforce for our long-term strategy build scalable custom manufacturing platform. During the year, we also made significant progress on our inorganic growth strategy. The acquisition of Epico Organic has strengthened backward integration and added substantial capacity, while the proposed acquisition of Bizotic Life Science will further accelerate expansion and regulatory readiness. With this initiative, our combined installed capacity is expected to reach around 400 to 1600 metric ton per annum, positioning us for the next phase scalable growth. Looking ahead, our priorities remain focused on expanding presence in regulated market through additional DMF filing, launching of around 7 new APIs in FY27 across additional therapeutic categories, diversifying into industrial and fine chemicals, improving cost competitiveness through backward integration, scaling CDMO opportunity and global customer engagement. Supported by this initiative, we remain confident in our ability to deliver approx 30% revenue CAGR over the next 3 years, along with sustainable margin performance and stronger global positioning. With this, I would now like to open the floor for question and answer.
Thank you. Participants are requested to raise their hand for the questions. Also, one can request their questions in the question box. We have Mr. Vaibhav Mishra. Sir, you may unmute and introduce yourself.
Hello, sir. Congratulations for the good set of numbers. So my question is regarding the margin profile. I think in Q3 we have clocked the margins around 35%. So I just want to know that are these margins sustainable, and what kind of margin profile can we expect going ahead in FY27 and 28?
So 35, what you are saying is the EBITDA, right?
Yeah, EBITDA
Yeah,
margins.
so that is sustainable as per our that even last discussion in last call also we clearly mentioned that generally for the domestic market we are working at least with the minimum 35% EBITDA, and for the reg market we are planning to means trying to keep the at least 50% of EBITDA. So that margin will remain the same for the any of our product for even next 2 3 years, and we know our customer as well as our product. So we have whatever the chemistry and manufacturing advantage with us, so that margin is sustainable for even next 2 3 years also.
So 35% is what are the sustainable ones? 35
Yes.
or above, correct, sir? Okay.
Yeah.
Okay. And sir, regarding the revenue potential, like we have, I think, announced like 2 acquisitions. One is completed, another is going to be completed within
Yeah.
3 months. So, is our revenue guidance for FY26 of 170-180 crore, and for FY27, I think we discussed around 370 to 380 crore kind of number in FY27. So, are those numbers intact? I mean, we are
Yeah,
on track.
this number are intake, and that was the actual very much conservative number. So we are believing that result would be much better than 370 to 380 CR.
All right, all right. That's good to know, sir. And so
Yeah.
one last question regarding the CDMO segment. I think we were developing 3 molecules, and those were, I think, in validation stage. So what is the current status on those
Yeah, so
molecules?
out of that, one molecule validation quantity is already dispatched within this month. And regarding two molecules, it will be in somewhere around Q1 of next financial year. So around June, July, we'll get the validation for that.
All right, all right. That's it from my side, and sir, all the best for the future quarters.
Thank you, Ebu.
Thank you. Just a quick reminder to everyone, if you have a question, please raise your hand using the reactions tab. Also, one can request their questions in the question box. Next, we have Mr. Paras Chheda. Sir, you may unmute and introduce yourself.
Hello. Yeah, thank you for this opportunity. Hello, Puneet bhai. Congratulations for a strong set of results, first of all. Sir, just couple of queries my end. You mentioned for the next 2 3 years, we are seeing about 30% CAGR growth. So
Yeah.
for 27, sir, 370, 380 looks possible. Yeah, I just thought, probably
No, no.
some. Yeah.
Yeah, Paras bhai, that is practically possible because what happened in our existing facility, we
Hmm.
are almost utilizing more than 90%. You can say like it is completely utilized right now. So whatever
Okay.
the top line we are getting this year, that may be the maximum limit, or maybe 15-20% we can increase. So we have the bottleneck in existing facility. That's why the immediate decision to acquire the some factory where we can go for the backward or further growing opportunities. So Apico Organics, what we have procured right now, that
Hmm.
will for that we have the confirmed order book of at least 120 to 130 CR for next year. So
FY27.
consolidated, what we are trying to means projecting that 370 to 380 CR, that is on very much conservative side, and that will be achieved for sure.
Acha. Okay, sir. So now that it comes to capacity, so have we completely acquired? Is the capacity operational, sir? I mean, what is the position on that and overall
Yeah,
capacity?
that
How much
Epic
we have?
Organic is completely operational, and it is utilized almost there also 80-85%. So we are planning for now, after acquisition of two facilities, company is planning for further organic expansion in the existing facilities. So that process is already going on. So mostly by end of the March, we'll have some update on that, and we'll go for the further expansion in existing plant, as well as we'll go for the some expansion in Epico also.
Okay. So, sir, what is the total capacity between these three facilities now?
That would be around, you can say like 1400 to 1600 metric ton per annum.
Okay, sir. And greenfield expansion continues. Yeah, that is on
Yeah,
the.
greenfield. Yeah. That is what I'm telling you. That is already activity is already going on, plan designing and everything. So once
Right.
it will be finalized, and we'll update to the exchange and all the shareholders. So by end of March, we are expecting some output on that, and we are going for further greenfield expansion also. And for that, we are just trying to evaluate the exact capacity what we have to build. So right now, roughly, we are planning that around 800 to 1000 metric ton will go for the greenfield new expansion.
But sir, just for clarity, the greenfield that I was talking about was initially for our, under that Anlon Healthcare we were looking at, not
Yes.
with Epic and Bisotic. So,
Yeah.
are you saying a greenfield for Anlon itself or under Epic and?
Greenfield for Anlon itself.
Acha.
We have the adjoining land and we are going for expansion over there only in the same premises, same campus.
And at the same time, Epic and Bisotic also we will try to see for organic expansion.
Yeah, exactly. Bizotic, we are not trying for organic expansion as of now, but in Epico, we are going for organic expansion.
Understood. And sir, between Epic and Bisotic, you said 89, almost 80% utilization as of now itself. Matlab.
In Epico, it is almost 80% utilization. Bizotic, we have the opportunity because right there, there is a utilization of around 50-55%.
Understood. So 370, 380 looks quite possible for
Yeah,
FY20.
yeah.
Okay. Okay, sir. Just one important thing from mind. I mean, basically another query on the working capital side, sir. Now, what is your target? Because of course, working capital receivable days are quite high for us. So, sir, what is our target for receivable days for FY27 end? And I mean, what is our target for the working capital days, basically?
See,
Because that's
receivable.
where I think the bottleneck will come in.
See, whatever the payment was due as per our previous H1 result, out of that we are almost cleared with the 35-40%. So I think by end of this financial year result, our working capital days should be somewhere around 180 to 185 days from whatever currently 290 days.
Acha, should be down to 180, 185 by
Yeah.
FY26 end.
Yeah, but next year it would be further improved. So more or less, as per the standard, it would be somewhere between 150 to 160 days.
And that looks achievable, sir?
Yeah. Next, because see, we have made some several changes for the customer payment terms and all those things. So
Okay.
in next financial year, we'll definitely achieve between 150 160 days.
So which means we are saying that our working capital will almost become half from whatever
Yes,
existed.
and we are not going for any further dilution as of now. So we are companies planning to start this organic expansion from own fund only, and maybe if required some bank debt only.
Acha. And so generally, what is our current order book?
For next year now, right?
Yeah, I mean, as of now itself, executable next year. Yeah.
See, generally what happened for 2 months, it's almost 1.5 months gone from this quarter.
Right.
So for remaining 1.5 quarter, you can say our order book is somewhere around 30 CR. But for next year,
Okay.
our capacity is completely booked and we don't have any single reactor available for manufacturing. But our order book in existing plant is
Okay.
almost for next year around 180, 190 CR. For APICO, we have the order book confirmed for 125 to 130 CR. And for Bizotic, as we have not acquired right now, but that once it will be acquisition is completed, then we'll have some intimation on that.
Understood. And 35% EBITDA margins are sort of reasonable, or
For
a floor margin should be
APICO, no,
assumed at
yeah,
20.
average EBITDA margin for our existing product portfolio and Anlon, it is 35% is achievable and that will remain the stable over next 2-3 years also. But in case of Epico, there is little bit slighter lower somewhere around 30%. So it will impact to average out. So you can say like 30 to 33% EBITDA will continuously maintain on that.
Right. And that is blended across all the three facilities.
Yeah, so our consolidated that would be between 30 to
Epico,
33%.
Anlon, and Bizotti.
Yeah.
Okay, 30 to 33%. Okay. And sir, just last query, mind if you have time. When do you expect typically, sir, or at what revenue rate do you expect positive operating cash flow?
I think next year we'll have the positive operating cash flow. Next financial year we'll have the positive operating cash flow.
By end of FY?
Yeah.
Understood, sir. Okay.
We are expecting at least by
Thank you so much.
H1 we'll have some positive, but if because there are some further planning is going on, so for sure we'll have the by end of FY27 we'll have the positive cash flow. But we are trying to expedite and we are planning that changes in some payment terms and all those things. If it will work with the customer
Right.
and customer will accept it, then we are trying that by H1 we'll get the positive cash flow.
So if not H1, at least H2 you're saying of
Yeah,
FY27
for
will
sure it will be
most likely.
positive.
Okay. Okay, sir. Okay. Thank you so much. Welcome back.
Yeah.
Thank you. Just a quick reminder to everyone, if you have a question, please raise your hand using the reactions tab. Also, one can request their questions in the question box. Next, we have Mr. Bhavesh Patel. Sir, you may unmute and introduce yourself.
Hi everyone, very good evening. This is Bhavesh Patel here from Patel Investments. So first of all, many congratulations on great set of numbers, Puneet Bhai and entire management team. And thank you for the opportunity. It is absolutely wonderful to note the turnaround from loss to profit in YOY comparison and also great progress in the inorganic growth and acquisitions, Puneet Bhai, you spoke about. So it is great. My questions are as follow. First question is, can you please outline your plan for completing the Epico Organic from 67.48% to full, or we are going to share the equity with the existing part? And the continuing of the question is, with these acquisitions of Epico and Bizotech, Anlon's consolidated capacity will be 1400 to 1600 MTPA, right? From the current 400 MTPA, which is what you are saying by March 2026. This is really impressive, and I want your confirmation on these numbers, please.
Yes, Bhavesh, firstly, thanks for your all these comments and everything. Your first question regarding the acquisition of Epico, right?
Yeah.
So right now we are planning that maybe in next financial year we'll make the Epico as a 100% subsidiary of Anlon. For the same, for Bizotic also, we'll make the 100% subsidiary of Anlon.
Perfect. This is very impressive, and I hope you continue on this
Yeah,
path.
because see, what actually the our planning was, we are planning for merging it, but if we'll go directly for the merger, then it will take almost 1.5 years. But once we'll make the 100% subsidiary, then the process was escalated and we can clear it within 3 to 4 months. So that is the whole idea for making the subsidiary right now. Then we'll go for the 100% subsidiary, then for the merger.
Wonderful. And this plays in terms of our synergy for further acquisitions as well. So
Yeah, exactly. So we are see companies looking for some further acquisition and evaluating for forward integration also, or for other diversification in pharmaceutical range also. Like the new chapter is right now opening in healthcare industry, like for the peptide, the specifically Ozempic and Mounjaro. But peptide is not only for the GLP-1 molecule. Along with that, the cosmetic peptide is a very huge market over there. So we are just evaluating for the peptide manufacturing facility also. So that will also going to be the greenfield project maybe in future for us. So that is all
fantastic.
evaluation is going on.
Fantastic. Best wishes for that. The second question is, what is the timeline you expect for the approvals of the 21 drug master files that you filed with global authorities? Is it
But
like
out of that, see, basically, it is not like the approval or something. We have already filed it. Most of the drug master file is already approved. Now the thing is that once after submission and approval of drug master file, we have to supply the validation quantity to our customer. They will prepare their dossier according to our DMF and from our material, and they will get the approval from their respective regulatory agency. Then they will start the commercial buying. So we are expecting in next financial year, out of 21, at least our 6 or 7 the key molecule will be commercialized.
That's great to know. Thank you for that. Third question is more in terms of your vision, which is impressive, which says to harness the strength of technology and research into becoming a leading global pharmaceutical company that delivers maximum consumer satisfaction. So basically, I'm also looking ahead. So if you can expand your vision to usage of technology, and especially now with the world we are talking about AI, ML, that you foresee, and especially with your strong background of research, want to see your vision for this, Puneet bhai.
Bhai, honestly, I'll tell you one thing. See, AI in healthcare for the chemical or pharmaceutical company, that is mainly used right now. The pharmaceutical company are using for the development of for the new molecules or searching or analyzing the molecules which can be the future drug. But we are already working on some of our in-house IT team on the AI thing for using it to make the Indian patient for our generic medicine or Anlon's medicine, or where we can use the AI or some of the our software which we have already developed in 2014-15. So that we want to restart again. In that we are trying to install the AI. By that we can make the distribution in all over the India for the medicine product, the delivery system, the whole ecosystem with the chemist, doctor, pathology lab, patient, and we can try to evaluate the installation of the AI based agent in the patient's mobile or everyone's mobile, that they can be your smart doctor in your phone. So we are already aligned with that vision what we have seen in 2014-15, but we were 10 years ahead in at that time, so we have stopped that project. Now we are trying to restart it, and once there are some development, then we'll give the intimation to all the shareholders along
Perfect.
with
Thank
the
you.
special presentation on that. And see, what we believe is in healthcare segment, all the pharma company in India are almost at the same level. See, they are maybe stronger in financial or resources, but at the new technology what world is changing for biosimilar peptide AI, so all the companies are the same level, so everyone is the having the equal opportunities. So now let's see who can get this opportunity and where we can reach it, and we are trying our best to get it.
Great. Thank you. The last question was more in terms of EBITDA and PAT margin that you answered. So thank you for that. I'll definitely say one thing, which is impressive plans for the growth, which you also confirmed.
Yeah,
So
I'll, by the way, sorry to interrupt you. I'll add one more thing.
sure.
See, there is a product called Loxoprofen, which is our key product for the Japan and all those market. Loxoprofen is the second largest non-steroidal anti-inflammatory drugs in the world. So we are trying to apply for the gel and spray form in CDSCO, DCGI, Indian government to launch the formulation in India, and we are expecting that will be the competitive to Volini gel, or we can be the better option in terms of safety and efficacy. So that development is already we have started, and maybe in next financial year we'll get the approval from DCJ India for gel and spray form of Loxoprofen. So that will be the replacement of diclofenac product which is getting sold in India.
Oh, that is great. Thank you for that.
So backward integration of the Loxoprofen, we are one of the largest manufacturer, and we are the only Indian manufacturer. So we'll have the some kind of first mover advantage with the monopoly with the new kind of safest NSAID or pain management product in India.
Wonderful. So, does this help in terms of the recent budget announcement for pharma? Government did something.
Yeah,
And
they have announced for the biosimilar product, PLI scheme, 10,000 crore for the biosimilar products. So that is what peptide evaluation or some bio product evaluation, what we are doing, will apply for that and will be eligible for that.
Okay, great. Thank you very much and appreciate your vision as well as the information you have given. Best wishes to all of us. Thank you.
Thank you, Vajpayee.
Thank you. Just a quick reminder to everyone, if you have a question, please raise your hand using the reactions tab. Also, one can request their questions in the question box. Next, we have Mrs. Disha C. Ma'am, you may unmute and introduce yourself.
Hello,
Yeah, Disha.
am I audible, sir?
Yeah.
Yeah, thank you so much for this opportunity. Firstly, congratulations on a good set of numbers. So, just a couple of questions. You mentioned that we are planning some greenfield expansion in both our existing facilities and in Epico. So, can you just quantify the capacity that you're planning to add?
In terms of quantity,
Yeah.
see, right now, whatever the organic expansion we are planning for the Anlon, that would be around 1200 to 1300 metric ton per annum. So that would be almost 3 times higher than what we are right now having.
Right.
And in Epic Organics, the organic expansion, what we are planning, that would be the more or less same size. So that would be around 500 to 600 metric ton per annum.
Okay. And so, for this current capacity that we have around 1400 metric tons per annum, what sort of peak revenue potential we see from here?
See, if we'll consider the current existing order book and current product portfolio, so out of that, we can go up to 700 to 800 CR. At the
And when are we planning? Yeah, so when are we planning to reach any timeline?
see, whatever the projection we are having in hand or the visibility from our customer for product execution and confirmation. So by 27 FY27 28, we are expecting at least by 650 to 700 CR we can achieve.
So by FY28, we can plan to reach 650 to 700 CR. Is
Yes,
that right?
yes.
Okay, and what sort of this capex are we planning, or how much have we incurred till now? And what is the target for this year and for next year?
See, right now for the organic expansion greenfield project, we are planning somewhere around 100 to 120 CR capex.
Okay. And when exactly do we see this coming online, the expansion coming online?
See, we are trying from our end that execution will be started from 1st of the April 26, and we are trying to complete the project at least by 31st March 2027 because we have the huge orders for some of the products. For that, we need the capacity, and we have to start it anyhow by 1st April 27.
Right. So then FY28 that will be huge because we have so
Yes,
we're planning to
we
because
will
we're
have
planning to
the spare capacity with all this order book and everything.
right and post this acquisition or post this expansion, what sort of peak revenue do we see?
See, on basis of that, I told you that by FY27 28, we can go up to not exactly peak revenue, but 700 to 750 CR we can reach easily. Because see what happens, some of the projects are already in pipeline. So maybe in H1 next year, I can commit to you by peak revenue. What can be the in after all this expansion? Because see, there
Okay,
are
sure, sir.
product mix over there. So which product we have to take and what is the planning we are going for? Because there are several activities altogether going on. So peak revenue of 3 years, it is very early for me to predict.
Okay, sir. Fair enough. And so this year, I think you mentioned we're targeting around 180 to 200 CR.
Hmm.
So for that, for like to reach 180, I think we're targeting around 59, 60 sort of revenues in Q4.
Yeah.
Out of which, how much will this Apico contribute?
See, 160 to 170 from Enlon, and Apico is almost considering our this month's revenue and next month's order book, 20-25 CR from Apico. So consolidated, it would be somewhere around 190 to 200 CR.
Okay. That's very helpful, sir. All the best. Thank
Yeah.
you.
Thank you.
Thank you. Just a quick reminder to everyone, if you have a question, please raise your hand using the reactions tab. Also, one can request their questions in the question box. Next, we have Mr. Paras Chheda. Sir, you may unmute and introduce yourself.
Thank you, sir. Sir, just trying to understand this 190 to 200 for FY26 and 370, 380 for FY27,
Hmm.
right? So now Epico and all, we have majority shareholding. So this 370, 380 is basis their 100% turnover consolidation or to the extent of our shareholding?
No, it's Steve, total consolidated.
No, so this will be Enlon share of, so see, if there is a 100% subsidiary, then there is no problem. But as long as that is not done, 370, 380 is consolidated for Enlon, or will be, or some portion of that will be taken away by the minorities of Epico and Bejotic.
No. Paras bhai, right now that will be the more than a 51% stake of Enlon. So in balance sheet, we have to consider the consolidated, the total
Correct.
turnover, because in within all three company there is no internal transaction. So there is no any related party transaction or any sale purchase between any of the entity.
No, understood, sir. So, but what will happen is that turnover will be 370, 380, but at the minority, when after the profit, level, you will have minority, interest in Epico and Bizotic who will take away. So the profit to the shareholders of Enlon will be lower to that extent, because it's not 100% owned, both these.
Yeah.
Correct? So
But
that way,
we have planned that before end of the next financial year, we'll do it the 100% subsidiary.
Acha. So chances are quite high that 370, 380 could.
Yeah, that is a complete chance of that.
100%, okay, for
Yeah.
Enlon. Understood, sir. Sir, okay, you mentioned 110 crores capex. So funding for that will be mostly debt route or some sort of equity is being planned?
We are expecting that we will generate the free cash flow during the next year. So we are expecting at least 40-50 CR from our routine cash flow. And
Okay.
we are planning for 150 to 60 CR from the bank loan.
Understood, sir. And what kind of peak debt to equity you're looking at, sir?
Peak?
By the end of next year?
Paras bhai, can you pardon? I miss your voice.
Okay. So peak debt to equity. So, for example, if you have 1 rupee equity in the system, you are comfortable to go up to 2 times of that debt and so on. So, for example, as of 30th September, our long-term, short-term debt is about 60 crores roughly.
Yeah.
And our net worth is approximately, let's say, 200 crore. So only 25% debt. So 0.25. So in FY27, when you are going for this 100 odd crore capex, etc., some sort of debt also will be required. Working capital also will be, a part of that short-term debt. So what short-term plus long-term debt to equity or total debt, whichever way,
Okay.
you are
You are
comfortable.
asking for debt to equity ratio, right?
Yes.
I think that would be somewhere around 0.5 to 0.55.
Acha. So less than 1, broadly.
Yeah.
Understood, sir. I think that is, quite reasonable. Yeah, understood, sir. Fair enough. And then these expansions will contribute majorly in FY28. So for
Yeah.
FY26, if my understanding is correct, you said totally 190 to 200. Out of that, 25 odd will come from Epico,
Yes.
but at 51% profit level for now.
Yes.
And 160, 170 will come from our Enlon.
Yes.
Understood. Okay. Thank you so much, sir.
Okay, Paresh bhai.
Thank you. Just a quick reminder to everyone, if you have a question, please raise your hand using the reactions tab. Also, one can request their questions in the question box. Next, we have Mr. Rudraksh Raheja. Sir, you may unmute and introduce yourself.
Yeah, thanks for the opportunity, sir. Am I audible?
Yeah, Rudrashi.
Yeah. Sir, building on the last participant's question only, 120 crore greenfield expansion we are doing, and 40-50 you said we can do from our own cash flows, and 50-60 we would need debt.
Yes.
But if we want to acquire the other two subsidiaries and take 100% control, that would further require more funds. So, any estimates on how much would that requirement be?
See, for that, what we are planning, maybe we are going for the option of share swapping to existing shareholder of that both the entities to make the 100% subsidiary.
Okay, so that won't be a cash transaction.
Yes, so there will be no cash crunch over there.
Understood, sir. Understood. And sir, coming to FY27 guidance of 370-380 crores, I wanted to understand where is this growth coming from? Is it mostly from our orders for loxoprofen and ketoprofen, or are we adding some new more molecules that is leading to this?
See, Rudrakshi, right now, whatever the 170, 180 CR from Anlon we are doing, that is from our existing product, ketoprofen or its intermediate and loxoprofen and some of the other molecule, what we are doing regularly. There is no any additional new product over there. And right now, we are not having any spare capacity in Anlon for expansion, for further manufacturing of the new product. So we are expecting that 170, 180 from our existing product line. Around whatever the new additional top line from the Epico is coming, that is not from the our product. Epico is having their own product range and which is already in contract with some of the buyers. So that business is already going on with the good margin and good turnover. So we don't want to disturb it. So for our backward integration of the intermediate, we are trying to do the some job work kind of or a lease agreement with some of the manufacturer so that we can accommodate the new product in our existing plant and loan until our greenfield expansion is completed. So that revenue we are expecting that 170, 180 from Anlon, around 125 to 130 from the Epico, and after acquisition of Bizotic, we are expecting between 75 to 80 CR from Bizotic.
Understood, sir. And sir, again, this Bizotic portfolio would be entirely different from Anlon's and Epico's portfolio.
No, Bizotic is more or less similar or in line with the Anlon. That they are the pharma API and intermediate facility both. So what we are planning is the domestic customer where we can target or regulatory requirement is not there. That will shift to Bizotic and will start the selling the product from the Bizotic due to capacity constraint in Anlon.
Understood. So through Anlon, we'll be doing mostly our key products, loxoprofen, dexketo, and ketoprofen. Is
Yes,
this understanding correct?
yes.
Got it, sir. Got it. Answer this number when you say we could potentially go to 800 crores. So that would require more drug additions, right? Or would that be possible with only on the basis of the two acquisitions that we planned and current
No,
drugs
no,
that
no. We have the further product in our hand, and that is already we are having the visibility for the commercialization by next financial year. So, on basis of the projection and customers' soft commitment, we are going for the further capex and or greenfield expansion. Above on that, we have the further capacity requirement for our existing product ketoprofen and loxoprofen also. So that
understood.
expansion will be used for the further development and validation of the new product and commercialization of the product which is already filed and validated, but it is not getting commercialized due to capacity constraint. So we are planning to add 6 or 7 new APIs in next financial year.
Understood, sir. So just a last question. If I recall correctly, you said that Daiichi numbers will be reflected in our financials from next year onwards. Is my
Yes.
understanding correct?
Yes.
Yes. Got it, sir. Got it. Got it. Thank you.
Yeah.
Thank you. Just a quick reminder to everyone. If you have a question, please raise your hand using the reactions tab. Also, one can request their questions in the question box. Next, we have Mr. Weber Mishra. Sir, you may unmute and introduce yourself.
Hello, sir. Most of the questions have been answered, and I must appreciate your vision of you. It's really impressive. Sir, one small question is left, like the margins you told around about Anlon 35% plus, and for Pico around 30% plus. So for Bizotic, which is I think mostly will be used for backward integration kind of work. So what the similar margins like Anlon is expected from Bizotic?
Yeah, but in Bizotic, we can expect more or less similar, not the similar, but between 30 to 35% EBITDA will have in Bizotic.
Okay. Got it, sir. That's it, sir, from my end. Thank you so much, sir.
Yeah.
We believe there are no further questions from anyone. Would now hand over the call to Mr. Park for the Q&A box.
Actually, there are a few questions in the Q&A box. Abhinav, if you could just take questions from them.
Okay. First question is from Mr. Chirag Joshi. Can you share approximate export versus domestic mix? Will export to Europe and USA benefit from tariff cut down? Puneet sir, are you there?
Yeah. I
Okay.
think I already reviewed to in chat box. You want the question answer books? I already reviewed to him.
Okay, sir. Next question is from Yash. What is the typical gestation period from molecule development to commercial revenue in your CDMO model?
Minimum 3 to 4 years.
Okay. Next question is from Ashish Thakur. With focus on NSAID APIs like ketoprofen and loxoprofen, how concentrated is revenue in this therapeutic segment, and what steps are being taken to diversify therapeutic exposure?
See, our almost 30%, 35% revenue is coming from loxoprofen and its intermediate, ketoprofen and its intermediate. Loxoprofen commercial quantities, what we are expecting for FY27, that would be similar to 25 to 30%. In the
Okay.
therapeutic diversification, what we are planning that some of the product like ticagrelor, ranolazine, that we are doing for the going for the cardiac, then tofacitinib for the arthritis, and silodosin for uncontrolled urination. That is portfolio is already going on. Apart from there are some CKD, chronic kidney disease, alpha keto analog, and some of the nutraceutical product contribution will come around 10 to 15%. So that is a mix of the portfolio, and so we can diversify it and we can de-risk our current product range.
Okay. So next question is from Garvita Jain. By when the greenfield expansion will be completed? Please clarify.
See, we are trying our best to complete it within a 1 year. Generally, as per the industry standard, people are expecting around 18 to 20 months. But we have already most of the regulatory approvals for that and statutory approvals for that. So we have to just construct the production block, remaining storage facility, QC, admin, QA, utility. We already have with us. So that will save over time. So we are expecting within 1 year we can operational the new greenfield expansion.
Okay, next question is from Chintan Vaghani. Sir, I'm asking about the Q on Q revenue. Okay, next question is from Sanjay Basak. How much raw material are you importing from China?
See, right now there is none of our KSM is from the China. Everything is indigenous and with the domestic supplier only. Some of the basic chemicals like solvent or some of the inorganic reagents, that is from the domestic supplier, but we are not importing directly anything from China.
So we have a follow-up question from Rudraksh Reja.
Yeah, thank you, sir, for the opportunity again. I wanted to ask what are the top three molecules in our Epico and Biozotic portfolio? Could you name those molecules?
See, in Biozotic, right now, Biozotic is doing our backward integration job work over there. But whatever the product we have planned there, that is for our backward means KSM like the ketonitrile, which is getting used for the ketoprofen. Then one of the our key raw material for loxoprofen is BMPPA, bromomethyl phenylpropionic acid. That we have planned over there, and some of the APIs like artemether and rifaximin that we have planned over there. So after acquisition, we have already doing the mapping for the product over there. But once acquisition will completed, then we'll finalize our this planning and inform to you. In Epico, there are the products is getting manufactured. Top three is the methyl propyl bromide, then iso propyl bromide, and one of the KSM for the pesticide industry with the bromination. That is a top three molecules over there.
Understood, sir. And these molecules in Epico, they are still doing 30% plus EBITDA margins.
Yeah.
Understood. And sir, are we selling these in the domestic markets or we are
Yeah, we
exporting?
are selling all this product in the domestic. Export we have not explored yet because we don't have the spare capacity. So we are just trying to explore the export opportunity for the intermediates of the Epico. But for that, we should have some spare capacity from our existing customers' order. So that is already under exploration.
Got it. And sir, who would be the top three customers for this Epico portfolio? If you could.
Right now, Neogen Chemicals Limited and Jubilant.
Understood, sir. Understood. Yes, sir. Thank you for taking my questions.
Yeah.
Thank you. Sir, we have another follow-up question from Mr. Paras Chheda. Sir, you may unmute yourself.
Yeah. Thank you, sir. So just one final thing on this Q3 revenue versus Q2 of FY26 was lower. I could not understand why that was lower generally by.
See, generally, what happen in our industry, it can be compared with the H1, H2 because in quarter to quarter, last quarter is almost vacation for the overseas customers due to Christmas and all those things. So most
Right.
of the shipment is getting hold for the December.
Understood. So typically, you will compare H1 versus H2 rather
H2,
than.
yeah. What happened again? I'll tell you one more thing. After this Q4, if you will consider the Q1 of the FY27, then it will be again the shrink from the Q4 of the FY26. So better
Right.
way to compare with the H1 and H2.
Understood. So H1, H2 is a better comparison.
Yeah.
Understood. Fair. Thank you so much.
Thank you. As there are no further questions, we would now like the management to give the closing remarks.
Yeah. Thank you, everyone. Thank you for your support and all these queries. And I would be happy to connect you again if you have some more queries, even on the personal call or email. You can be in touch with the Parth. So he'll connect with me, and whatever the question or any further clarification you require, then you can connect to us anytime. And we'll have the great Q4 on the way, and we'll meet you again. All once again after declaration of Q4 result.
Thank you for joining Anlon Healthcare Limited Q3 and 9M FY26 conference call hosted by Confidely Partners. Participants may sign off.